Dixon Tech joining in the EMS space as India is advancing its FTA journey. Does this create opportunities for players like Dixon Tech? How is the business getting impacted due to supply chain disruptions? All of that, we have Atul Lall, who's the Managing Director, joining in. Thanks a lot, Mr. Lall, for joining in. You know, you were fairly optimistic about growth in FY26. With all these free trade agreements that have been signed, how does your export business look? I remember the last time you said that, you know, from almost 1.5 million pieces, you could go all the way up to 10 million in terms of volumes for exports. How does that, translate into revenue? What's the opportunity here? And are you facing any sort of supply issues when it comes to imports?
So on the export side, we are definitely seeing an upside. Last year, we had an exports of almost 1,800 odd crores. We feel fairly confident that this year is going to be more than 8,000 crores. So that's a massive jump. This exports is mainly targeted towards US market and also one of our strategic partners, which has a very large presence in African markets. We've started exports from India. For our African market, just trial orders, but we think it's going to ramp up in this year. Also in our other businesses like lighting, we're getting positive feelers and some trial shipments to both Europe and North American markets have taken off. We're still awaiting the contours of FTA with UK and let's see how it pans out for EU. But I think it's going to be positive for the industry. It's going to be positive for the country.
Right. So then there's a two-part question here. One, you said most of your exports currently are directed towards the US. EU is an opportunity. So what's the size of the opportunity? Is there any number that you're aspirationally targeting over the next couple of years from EU and non-US countries, basically? And secondly, on imports, what proportion of your components are imported right now? And are there any troubles there?
So to give a number that what potentially can be non-US exports is slightly difficult at this stage. Because we're going to go to that level of planning only when there is clarity that how the global comparative tariffs are going to happen globally. That's what's going to determine the strategy. But definitely there is a significant upside towards exports, and I shared with you the number that we are looking at almost 4x growth. It's a large number of almost 8,000 to 9,000 crores that we're looking at in the current fiscal. As far as imports is concerned, every domain, every product category has different level of imports. When we are looking at our appliances category like washing machines or refrigerators, the import content is around 30-35%. When we are looking at our electronic devices, let's say like smartphones, the import content is almost 75%. So it varies. As far as the constraints are concerned, as of now, I'm not seeing any constraints. The only challenge, and it is a significant challenge, that the freight rates have gone up significantly. The freight rates from the various ports from where we import have increased from around $800 to around $2,500. So that I can see and I can sense, particularly what's happening in West Asia, that's going to be something to be put under lens.
So does this put your 90 to 100 basis points of margin expansion over the next couple of years at risk? Or are you able to pass these increases on?
You see, this is a temporary phenomenon. There has been volatility. At times, the freight rates in the last 2 years had gone up to almost $2,500 for a 40-feet container. It came down to almost $700. So this is something one has to live with. On a long-term basis, I don't think this is sustainable. I don't think it's going to have any significant impact on industries or Dixon's margins.
Okay.
But this is
Mr. Lall, good morning. Prashant here. So you're saying it's temporary at this stage without too much disruption. Could you, all said and done, by the what do you think? I mean, this year, it's still early. I know you've given us some guidance, especially in margins, etc. On overall growth, on top-line growth, etc., are you well placed to achieve the guidance you sort of put out, and on an overall basis, sir, given all the uncertainty?
We have a we have an extremely good order book, Prashant. Across all the businesses, we have multiple customers. We have large share of the Indian market, more than 35-40%. We are 2 to 3x of our competition. So we are confident. In fact, we are very confident the growth is going to be aggressive.
You know, the other bit is with regards to, and I think we've discussed this earlier as well, with what's happening with China, right? Could you give us a sense of you're doing backward integration as well, component manufacturing? I think you've over the last many interactions you've highlighted as you go more into that, that gives you a bit of a margin lift as well. But as things stand right now, what is the dependence on imports from China, sir, overall across the value chain for what you manufacture?
So that's what I was sharing, Prashant. Largest business is mobiles. And mobile almost 75-77% is imports. And that's what we're pursuing, that the Indian value addition significantly increases. And that's the reason we are going to be making very significant investments in the non-semiconductor component space as of now. We are pursuing the ECMS scheme with the government of India. And in next 4 to 6 weeks, we'll be filing our applications. Yeah. So
and this entire 70-75% is all China, right? I mean, can assume bulk of it.
Not everything is from China, bulk of it from China. Yeah, that's right.
All right. So, you know, the last time you joined us, you did say 40-45% revenue growth possible in FY26 with 20 to 25 basis points margin expansion because the backward integration, process that you're doing. You also said that you were in advanced stages of closing a partnership for a camera module. Where does that stand now?
So as I shared with you earlier, we are looking at very aggressive growth. Yeah. And we are aspiring for this kind of margin expansion, the number that you mentioned. We are pursuing backward integration. So as I was just sharing, we have already started implementing the project of a display modules for mobile phones, for laptops, tablets, for televisions, and also for automotive displays. For camera modules, we are pursuing negotiations. In all probability, we'll be going ahead with that project. In just another 3 to 4 weeks, we feel that we should be announcing something. That's where we are. Apart from that, we're also pursuing a couple of other possible projects. There's lithium-ion batteries and mechanical enclosures.
All right. Hi, Mr. Lall. Good morning. Good to see you in. Nigel on this side. Very quickly, before we let you go, we understand the customs duty. Well, the department actually has issued notices to several consumer durable players with regard to the copper imports under the ASEAN FTA. Have you gotten notice? Do you firstly import under this FTA?
No, we don't.
So no notice for you?
Not for us.
And what about the Vivo laptops? Because that was a concern for analysts as well. Rather, Vivo rollout. When does that happen?
So with Vivo, we have signed a binding term sheet, wherein the Vivo manufacturing facility, and Vivo is a very large brand.
Yes.
Yeah, has been signed. We have filed our application for Press Note 3 approval from the Government of India. That's being pursued. And also the teams are working on signing the definitive agreements. So it's being pursued very vigorously, and we're excited about this partnership with Vivo because this is going to give a very big quantum jump to our mobile revenues.
So how long before we can hear on this? Because next 3 to 4 weeks, we'll keep an eye on 2 developments. One is the camera module integration, backward integration, and the second one is the Vivo thing. Should it happen in the next 3 to 4 weeks?
See, Press Note 3 approval takes time with the government.
Okay. So a little more than that.
So it's very difficult to say how much time it's going to take, but we are pursuing very vigorously. It's not in our hands.
It again comes back to that China question, right? In that sense. But I think there has been some relaxation and general attitudes have softened a little bit over the last. That's what we've heard from companies across other industries as well. Mr. Lall, thank you very much for joining us. Good conversation. Appreciate you joining us here on CNBC-TV18 as always. Thank you.